What's up, everybody? We're back with another episode of Bullish Chips, where we talk about chips and only chips. More specifically, how you can use a proven and repeatable strategy to make money every day by trading the triple leveraged Bullish Semiconductor ETF, which goes by the ticker symbol SOXL. Make sure you hit the subscribe button and the notification bell. That way you're notified about our videos. We do release them every night throughout the week, once on the weekend, and from time to time we release bonus content as well. Make sure you follow us on X at Bullish Chips. We give real-time entries and exits for the scalps and day trades that we make, as well as the mid and long-term trades as well. Just a reminder, we're not financial advisors. We don't offer financial advice, but what we do offer is our view of the price action for SOXL, not only in the current day and in the past, but where we believe price action will take us in the future based off of our trading method and trading plan. So in today's agenda, we will go ahead and recap today's price action. We'll do a quick wide view of SOXL's price action from the week, month, quarter, and year, just like we do every day. Then we will go into the market maker's expected move for Friday. So those of you that like to do zero-day trades, this will be kind of important for you. It's, again, not an end-all be-all level, but it's something you want to know about. And then we'll get into setting our 4-hour markers and triggers and targets for tomorrow, and just a quick review of the triggers and targets for the week, month, quarter, and year. So let's get into the charts. We're going to take a quick look at a small time frame chart, just to get a look at how, if you are scalping and day trading, how our 4-hour levels, as well as some of the other levels that we use that are not on a lot of other people's charts, how they come into play on the intraday activity. So we can see here this price level 1 in peach is the opening print. So basically where price opened, this was yesterday's close, so there was a slight gap up. We did get a big push up. We had a little bit of activity here at this daily broadening formation. If you remember back to this was early July. This was the second daily broadening formation that was put in. It was the more narrow broadening formation that kind of formed the range that we were in for the last 9 weeks. So there was a little bit of action here, but it did manage to push through, and you can see it ran into a 4-hour broadening formation. That's this gray line right here. If you're not familiar with our color coding system, after this video, go ahead and check out the bonus content on our YouTube page, and check out the precision trading video. And then if you like that as well, you can watch the charting basics video that goes into a little bit more detail as well. So anyway, back to the chart, we did run into this 4-hour broadening formation. So again, unless you use the strat like we do, you may not have this broadening formation out here, but it did have that broadening formation, and so it did react off of that. You could see the red, kind of almost a doji, so it's indecision here up at the top, and then it ended up falling back out, pushing back down, closing the gap, and bouncing off of what amounts to be the 4-hour trigger to the upside, which is the same as previous high of day. So we didn't bounce immediately off of it. We caught our support right here at the year flip. Again, this has been kind of a pain in the side of bulls over the last 9 weeks, right? This has been a point of resistance. We are now above it, and we're starting to use this, what used to be resistance, as support. So that's another sign for a bullish sign, that we are getting the price acceptance above the year flip. In a minute, we'll go over the time frame continuity, but we'll just go through the short time frame here real quick. So we did get the bounce here. If you did want a little riskier play, then what the rules of our strategy call for, you could have got in here recognizing it was a bounce off of a strong support level. Again, here this purple line is last week's high. So just as it was resistance before, it gets turned into support once you get price action above it. So we had 3 levels of pretty good support here. If you combine this whole zone, that's a lot of bullish support, right? The opening print, the overnight high, last week's high, previous high a day, and last week's flip. So we did get the bounce off of there. And then if you did get in calls, you could have waited till you got the higher low here above the opening print, giving yourself a stop loss down here below the previous low a day. So you did get the lower high off the 5 minute, but on the 15 it was a higher low, and you got the slow grind up for the rest of the day. There was a little bit of the drop off at the end of the day. Some of that might have been due to Marvell having earnings after hours today. Looking at them, oh yeah, they're down 11% right now. So they doesn't sound like they had either good earnings reporting, or the guidance going forward wasn't great. So that's the look at it from the short time frame position. So for you scalpers and day traders, let's just look at it on the day chart. Take some of these out of here. All right, so as you can see with our charting method, if you're not familiar with it, it is the strat. There's a free document in a link to a free document in our description to this video, as well as a link to Rob Smith's YouTube page if you're not familiar with the strat. It's a very simple concept to learn. So, by the end of this video, you should probably have the hang of it. If not, you can check out, again, the precision trading and charting video, charting basics video in our bonus content, or you can check out any information out there on the internet about the strat and Rob Smith. Anyways, getting back to the day, yesterday we did have the 3 in the strat world. It's a 3 in a lot of trading circles. This is called a bullish engulfing candle. So it does recognize it leaning bullish because it was not only closed green, but it had a pretty big green body to it. Closing at the top of the move. So momentum was moving forward. So that's where that morning thrust came from. Nvidia's earnings didn't really do too much, in my opinion, right? If they really went off, then we would have had a much bigger move to the upside or the downside. But instead we got kind of a muted, almost a failed 2 up. It did go 2 up, but price action almost did pull back down, and flipping underneath where price opened before closing, but it remained green. So there is the 3 2 up 2 down reversal on the board. We could get that tomorrow, especially with Marvell's earnings. If there's some type of sympathy plays throughout chips, and everybody's down tomorrow, we could get that 2 down, triggering the 3 2 up 2 down on the day, with a very clear entry at the low of today, which was 27.96, and a very clear target or magnitude, which is the low of this 3 here at 27.28. So this 3 2 up 2 down is one of the 6 major reversal patterns in the strat, and another reason why we like it: very clear entry, very clear exit. If we do get to this magnitude of the 3 2 up 2 down, you could just release some of your position. That would put us in a 1 combo 2 up, combo 2 down here. It's a little bit of a stretch, but the structure is there with the thin structure here from Jackson Hole notes on Friday. So we could get that thin structure retracement if we do get the extend past the magnitude of the 3 2 up 2 down. So just have those. When we get into our triggers and targets, we'll have those marked out. Looking at it from just from a day perspective, we're still looking good. We went higher than the let's get rid of this. Went higher than the soft lower high previously on Friday, and continuing to stay above that level. So trying to get that higher high on the day perspective. The market maker's expected move, the top of it is up here at 29.74. So we could see that push up to there tomorrow. Again, the market maker's expected move is not an end all be all, so we could get a push through there and test this weekly broadening formation. So right now things are looking pretty bullish, but we've got to keep our eye on overnight and in the morning, pre-market, where we're going to open up and what type of momentum we're going to have, keeping an eye on the internals. Speaking of the internals, if we look at the internals for today, it kind of tells the story as well, right? We have the SOXL price action here, 5 minute. We have the tick Q, which is basically the number of stocks in QQQ ticking up minus the number of stocks ticking down. It's just a measure of breadth, basically. On a real-time perspective, this moves a little bit quicker than 80 QD, which is just another measure of breadth. And then we have vol QD, which is basically a measure of money flow. Money going in is positive, money going out is negative below the zero line. But today we opened up positive, not up in trend higher zone, up in the 400 million mark, but it did open positive, and it had a slow creep up. Tick Q opened up in trend higher zone, but immediately dropped down to the zero line and basically rode the zero line all day with a little more bullish leaning action than bearish leaning action. And then, of course, the 80QD, which is the breadth, once again, that dropped from the beginning and just rode the zero line as well. So you could see why it was just a muted push higher. Only thing that was happening was, money was flowing in. It wasn't at a great pace because we were nowhere in trend higher zone, but it was continuously flowing in slowly throughout the day, which if breadth remains muted, just equals out to being a slow move up in the price action for SOXL. So just another tool in your tool chest. You don't want to put all your eggs in the basket of the internals, just trying to trade off of the internals. But it's something else out there that can help you read price action, right? So if we get back to our charts, there's our charts. There we go. From the day perspective, we've kind of gone over what happened and what position we're in, kind of leading bullish. Again, we are at the top of this range. Again, this 28 to 24 range was the range that we have been in for the past 9 weeks. Did peak above to about the 30 level and peak below to the 2350 level. So the range might have expanded here, and why we're getting the continuous push up instead of getting a reversal back down into range at this 28 level. But again, the 3-2 up, 2 down is on the board. So this could be the reversal tomorrow that pushes us back down to the bottom of the range, right? Let's go ahead and look at the week perspective. And the one, well, not the one, but another bullish indicator for us is the fact that we set a higher low from the week perspective today, right? Today we did go 2 up on the week, giving us a 2 down, 2 up. When that reversal triggers, it triggers at the high of the 2 down, so very clear entry at 28.32. And the magnitude or the target for that move is the high of the 2 up that was prior to the 2 down. So that is 29.66. So we've got 28.32 to 29.66, about $1.30 worth of movement, which is a good movement for SOXL, right? It's at the price that it's at this point in time. You can see how a 35-cent move was 1.25% move on the underlying ETF. So that would give you a pretty good move. And then again, if you do go past the target, we do have the weekly broadening formation that we could go up here and pressure, giving you even a little bit more movement. So from a week perspective, it's again leaning bullish. Talking about the time frame continuity, coming back to that, if we take a look at the upper left hand part of the chart, we've got the week, the month, the quarter, and the year all green now. That's what we've been contending with this year flip, right at 28.13. That flipped the year green and giving us that full time frame continuity. So that's more momentum for the bulls as well, right? So a lot of data leaning bullish, but not totally out of the water yet. We've still got to keep in mind what can trigger to the downside and how easily it can trigger. So the week, again, looking pretty good. The month, we're back to let's make this a little bigger. We are back to being in force. Wait, are we? We're so close. 2850, yeah. 2853. So we're just barely in force on the green 3, right? So we had come back. The price, current price, had come back inside the price action from last month, which is not necessarily leaning bearish, but it's more neutral in a sense, even though we do have the green 3. So the fact that we've been able to push back up above the high of last month to give us the in-force 3, again, gives us a little bit more momentum to the upside. So again, kind of leaning bullish to on the month perspective. Looking at the quarter, we're still looking great from a quarter perspective. The 2 up, the 2 down, 2 up has been in force and stayed in force for a while now. So even with the range coming down to 24, the high of this candle is 25.84. So it's just at the low of the range, the 28 to 24 range that we've been in for 9 weeks. So there's a pretty good probability that we should stay in force through this quarter. Again, another thing we do have to keep in mind, we're coming into that seasonality. I know I keep talking about it and we haven't seen it yet. So that's why we haven't bought puts yet or been really selling calls yet, because nothing has triggered a bigger movement to the downside. But we do need to keep in mind that September, October are the weakest performing months for tech. throughout the year. So just keep in mind, we could push, even make a higher high on the day, and pull back down to the bottom of this range and possibly even peak below. And we've got gaps below. Not saying we would go fill all of them, but this one could be likely to fill if we do get some more pressure to the downside in September or October. So we just want to keep that in mind. Not necessarily right now going all out on far dated expiration calls, because we do still have to keep in mind that we have just barely come back into full time frame continuity to the upside. So we want to see that real support on like a day perspective, right? We haven't had it yet. We thought we had it here with the green 3 after poking above the 2813 year flip. But the next day we brought back below, and we're back to that level now. So we want to see that push up and then push back down and get that higher low from a day perspective, maybe even the week perspective, and get the push back up to show us, now it's time to enter those longer dated calls. We already have January 26 calls, but as these March and June calls are starting to roll out, we can start to get into those as well. And then just keeping our stop losses out there to keep any profit or stop from taking big losses if price action does reverse back down. Like I was saying, we've had the poke up above the 28 range and below, so now the new range may be this basically 30 and 28.50, right? So got to watch for maybe continued push up and even above that $30 price. We do have the 30.55 level that is, let's bring that up. From, if you look at the 2020 low to all-time high, we've got, if we put a Fibonacci here from the low to the high, right, we've got this 61.8 fib, a very strong fib right here at this 30.55. So we may just poke up to 30.55 and, or somewhere around there before we get the push back down. And that would, fall within the range of that $30 top. And possibly be going back down to the 23.50 range. And if we break below that range, that's how we could fill that gap. So could just be sideways movement, but it is showing a little bit more bullish progression than we've been seeing over the 8 weeks when we get to the top of the range. So we've got a lot more in our favor. So I think I've kind of looked at the wide range view long enough. I know people are anxious to get the triggers and targets out here. So real quick, let's just look at the market maker's expected move for tomorrow. So all of you who like to play 0 day to expiration, 0 DTEs, this can be kind of key for you as well. So if we go out here to the options chain for this Friday, or tomorrow basically, we can see this is Thinkorswim. I've used Thinkorswim for I don't know, maybe a decade. So way before Schwab bottom and all of that. So I'm just used to using this. I believe TradingView has this, and Webull. I think most platforms should have this. I'm not sure if it's in the same location, but if you're using Thinkorswim, you can look at the options chain and you can see the market maker's expected move here is $1.16, $1.17-ish, $1.16, $1.17. So what we'll do is go out here to our notes, and we will take note of that. So I used $1.16. So we can see that today we closed at 28.53. So if you add $1.16 to that, you get the 29.69. If you subtract $1.16 from 28.53, you get the 27.37. So there is basically a market maker's expected range that we should have price action for SOXL anywhere between 29.69 and 27.37. So if we look at our chart for tomorrow, we went ahead and marked that out, right? So we don't need to make it that big. That's kind of crazy. We have our market maker's expected move high. Again, our orange, when we put that in orange, that's on the day time frame, and the only time we mark the market maker's expected move on a day's time frame is for Friday. You can see the purple one here is the market maker's expected move. That's the top of the move for the week. So they kind of coincide. They're not too far away from each other. 30 cents, 20 to 30 cents is, still a reasonable amount of movement for SOXL at this price level. So not necessarily the exact same level, but general range, right? So we have our expected move there, and then the expected move low is here, and that coincides with the week flip. So they're kind of overlapping. You can't really see. There we go. So you have the week flip here at 27.35. That's where the week would flip red, and our market makes an expected move low of 27.37. So we've got those plotted on our chart, and we've also plotted our 4-hour markers, right? So if you're not familiar with the channel, make sure to pay attention, especially if you are an intraday trader, 0-day DTE trader. This really goes for you, right? So today we have the 2-1. The first 4-hour candle was a 2 up. The second 4-hour candle was a 1, or just an inside candle. So that gives us a reversal both to the upside and downside, because it's the 1 is just an indecision candle, right? It tried going up a little bit, it tried going down a little bit, and then it just couldn't even. Neither bulls or bears won, right? So we've got the week flip here. So far, the overnight low is right here at 28.05, and the overnight high is 28.59. So those will come into play when we look at where we open tomorrow. Those can be either levels of resistance or support, depending on where we open, above or below those levels. And we've got our previous low of day and previous high of day. So these all really come into play if you are doing scalping or day trading. Let's just take a look back at today's action and just pull up like the 5-minute again. You can see the interaction, right? If you're familiar with the channel, I apologize. We're kind of going over this again, but you can see how it comes into play, right? The opening print couldn't find support at the overnight high, couldn't find support at the overnight low. It found the support here at previous high of day, the year flip, and then slowly gained these back. The opening print and overnight high gained those back as support. They acted as support, a little bit of resistance back to support, You see how they come into play. This daily broadening formation. A lot of people don't draw broadening formations unless they use the strat, but this broadening formation did come into play in the end as well, because that's where it rejected off of at the end of the day. The 4-hour broadening rejected the initial move of the day. The high of last week was also a point of resistance and support as well. So these are all levels that you would want to be aware of if you are an intraday trader. So let's go back to our chart for today and get to the 4-hour, because that's where we like to play like the 1-hour more. And that's usually more in a trending market. The last 9 weeks, we've just found ourselves doing a lot more intraday trading, from more of like scalping. Because maybe an hour or two in and then out, maybe a few hours. We've had a couple turn into day trades, but just having to get this choppy movement out of the way. Have been swinging calls from the bottom of the range, the 24 range, and swinging puts from the top of the range. We haven't got into either one really on a month out perspective, because we're waiting for either that flip or confirmation to the upside, because we're at the edge of the range right now. So don't want to jump into too much, too heavy until it's determined whether we're going to continue to go up or down. Now we have a few calls for September 19th that we've stayed in through the push up, because we haven't had the trigger to get out of them, right? Especially on like a 4-hour perspective, or even the day. We've been setting higher lows. So, we've remained in those, and we've still got time on them, and we'll continue to ride those up if we continue to push up. But if we get the trigger that we're going to be reversing back to the downside on the 1-hour, 4-hour, we'll go ahead and get out of those, take our profit, and look at where we want to enter into puts on confirmation to the downside. Some type of lower high underneath the range, top of the range or something like that. But for right now, again, we're leaning bullish. If we get the 2-1-2 down to the downside, right? So if the 4-hour the price action in the first 4-hour candle of tomorrow goes below the low of the second 4-hour candle of today, that is 28.34, and that would trigger a 2-1-2 down, right? Very clear entry at 28.34, which is the low of the 1, and the magnitude, or the initial target, is 27.96. That's the low of the candle before. That should be a 2 up. Is the low of the 2 up to the left of this one, right? So triggering here, targeting here. We just have those written out form here. We have extended targets to 27.77 and 27.28. 27.77 is the low of this candle. 27.78 28 is the low of this candle right here, which does coincide with the low of the market maker's expected move, and this is the week flip as well. So we would probably see that as an area of support. It could wick below it and come back above it. It could just go below it and just continue down, maybe test last week's 50%, but we would expect that to be a level of support, maybe even at the end of the day. So if we do go to the downside, I don't imagine too far of a fall, but we do have to have our options open for extended targets. Another reason why we don't have too many extended targets on the 4-hour is because these 4-hour triggers and targets roll into the day, so we can just kind of pick up at the day perspective at that point. Triggering to the upside, we would have the 2-1-2 up, triggering at the high of this candle, exiting at the high of this candle. So we're triggering at 28.81, exiting at 29.11 if you would like. You could remain in that if you've got momentum. You do have some 4-hour broadening formations you have to deal with here, but you could try and ride it up to this 29.69, which is the market maker's expected move high, which coincides with the 29.66, which is a higher high on the day time frame as well. So we do have that extended target of 29.66 to the upside. That would create a higher high and increase that broadening formation. Those 4-hour triggers and targets roll us into the 1-day triggers and targets. As I mentioned at the open of this video, the 3-2 up, 2 down is still on the board, right? So if like Marvell really triggers things to the downside for chips tomorrow, and tomorrow's price action goes below the low of today, that triggers the 3-2 up, 2 down, very clear entry at today's low, very clear exit at the low of the 3, right? And so again, that kind of coincides with the market maker's expected move, the low of the market maker's expected move, and the week flip. So we have the trigger here at 29.76, which is again the magnitude of the 4-hour move. That's the trigger for the 1-day move, and the magnitude for that 3-2 up, 2 down is 27.28. So we could expect to see movement to 27.28, which was one of our extended targets on the 4-hour. If we do see that 27.28 and we've really got momentum to the downside, again, that does put us in a kind of a what happened to my? That does put us in a convoluted one combo 2 up, 2 down. That would target the low of the candle to the left of the 2, so that's this 25.34. So on the day, we've got 27.28 as an initial target, and then we've got a couple other targets on the way down to that 25.34, because that would be a pretty big move there. So we got the low of this, the low of this one and last week's 50% as other targets as well. That could be bounce points, right? You can see here there's a little bit of support and resistance fighting, right? If we look to the left at the low of this one. And then if we look at the 50% of last week, you can see that's another level on an intraday perspective that there was a fight over. So those are triggers and targets to the downside. Triggers and targets to the upside. This is a reversal, giving us a very clear entry, very clear exit. The 2 up, 2 up is not a reversal pattern. It's a continuation pattern. So you have to, you have a very clear entry, right, which is the high of today. But your target has to be based off of your reading of price action. So we've got a couple of things that we can bring into play here, and that is the market maker's expected move, the high of that, which is that 29.69. We've got the higher high on the day perspective. We've got the high of the expected move for the top of the top of the expected move for the week as well. If we really get some momentum going, that brings that 30.55 back into play as well, which coincides with this weekly broadening formation. Again, remember that 30.55 is the 61.8 fib of the 2020 low to all-time high move, and then you can see this weekly broadening formation would be right here as well. So you've got some levels to the upside you can use as targets. So in our notes here, we've got 29.66 and 30.55 as the first targets. We do have the 32.64 and 36.15 as the higher highs on the day. 36.15 would be a stretch, but 32.64, if we've really got some momentum, it could be on the board. So those are our triggers and targets for the 4-hour and day. I hope they've been clear. I hope I haven't gone through them too quickly. I hope I haven't confused anyone with anything. But we do have the market maker's expected move of $1.16, giving us a range of 29.69 to 27.37, which is where we should expect price action. Again, we can go above this or below this, but most of the price action we should see within there. We've got our triggers and targets to the day. Again, the week did trigger the failed 2 down, 2 up. So that triggered at 28.32. That does have a magnitude of 29.66. So you can see how that plays in here with the targets as well for the 4 hour and the day. And then if it does reach magnitude and continue to push up, we've got the extended target of 30.55, which again plays in with the day, 32.64, which is a higher high on the day, and 36.15, which is also a higher high on the day. So those are the triggers and targets. If we do go red 3 on the week, a bearish engulfer, it would have to be a pretty big drop, and we'd have to drop below this 23.66 level. So, that's $5, a little more than $5, or a little less than $5. I'm sorry. I don't think we would see that tomorrow. So at the very most, I think we would just no longer be in force with the 2 down, 2 up, and price action would be back within last week's price. But again, things are leaning pretty bullish. I'm not predicting anything. I'm not into predictions. That's why I have triggers and targets to the upside and downside. That way we react to the price action. Really, we respond. Reaction implies that there's no thought. Responding means that there's thought behind it, and we've put plenty of thought behind this, right? We've got these notes. We know the chart like the back of our hand. We know that the triggers and targets for the year. Now the year has flipped green, so we can actually turn that green, but we're in full time frame continuity to the upside. We know what our triggers and targets are, and all we have to do is respond to price action tomorrow. So I hope everybody has enjoyed this video. I hope I haven't taken up too much of your time. I try and cram as much information in as I can without being boring, but I don't want to leave anything out either, because again, price can take us in either direction. I don't predict. There are some people out there that can predict and are good at predicting, but that's not what I do. We just respond to price action. So to be able to do that properly, we have to have our proper levels, like the 4 hour markers and our triggers and targets, and then we have to have our the chart charted out properly, right? So that we can know where our points of resistance and support are from a higher time perspective. So again, I hope everybody's enjoyed this video. If you've made it this far, hit the thumbs up. It really helps the channel grow. We are just trying to spread the word about this strat, our little twist on the strat that we've layered on top of the strat. But most importantly, we were trying to spread the word about SOXL. It's not a new ETF by any means, and there are plenty of people that know about it out there. But if we can, let more people know about it, it becomes even more liquid, and that just makes everything better for trading for all of us. So I hope everybody gets some good rest tonight. Wake up refreshed tomorrow, get a good day's worth of trading in. Maybe you're in and out by the morning. Maybe you wait till midday, or however you want to trade tomorrow. I wish you luck, and I'll see you out there.